This is our topic 9 for our financial curriculum, Investor Pitch Deck and Growth Matrices. Firstly, we'll discuss the pitch deck essentials. A brief introduction. A brief introduction comprises of the basic introduction of the owner of the company, the vision and the mission carried forward, the idea and the product details. Secondly, a vision statement. A vision statement is a document that states the current and the future objectives of an organization. The vision statement is intended as a guide to help the organization make decisions that align with its philosophy and declared sets of goals. Google's vision statement is to provide access to the world's information in one click. The company's nature of business is a direct manifestation of this vision statement. For instance, Google's most popular product is its search engine service. Thirdly, mission statement. A mission statement is a short statement of why an organization exists, why its overall goal is identifying the goal of its operations, what kind of product or service it provides, its primary customers or market, and its geographical region of operation. Google's mission statement is to organize the world's information and make it universally accessible and useful. Google continues to focus on ensuring that people access the information they need. Moving forward to the fourth essential of our pitch deck, opportunity or market size. It generally refers to the size of the market of your startup. In an investor pitch deck, you need to who have graphical illustrations what opportunity or the market you're capturing through your startup. Opportunity market means that what is the percentage from the entire population that is willing or capable of using your product or service. Fifth, industry overview you're operating in. Demographics. Demography is the study of demographics, the social characteristics and the statistics of a human population. The study of size, age, structures, and economical differences. It refers to the exact percentage or the exact market referring to the age or the economical conditions therein. Background. Background of industry relating to the product details. What sort of a background it relates to IT field or whatever specific production you have. Third, existing companies or competitors. The existing competitors you have in the market. What USP do you have and your competitors don't? Moving on to a sixth essential of the pitch deck, financial models and growth rate. Burning and earning rates. The burn rate is a measure related to how fast a company spends its available supply of cash. Graphical illustrations of growth in sales. What is the exact revenue growth in the last few months? Graphical illustrations of customers, the number of customers entirely. Graphical illustrations of new customers, the number of new customers through sales. Graphical illustrations of customer retention. Customer retention refers to the ability of a company or product to retain its customers over some specific time. Graphical illustrations of repeat customers, and return customers are different but related terms. Related customers are those who have purchased from your company once before and decided to buy again. Graphical illustrations of growth per month or growth per year. Customer lifetime value. Customer lifetime value is the total amount of money a customer is expected to spend in your business or your product during their entire lifetime. Customer acquisition cost. Customer acquisition cost is the cost of winning a customer to purchase a product or service. Moving further to the seventh, eighth, and ninth essentials of the pitch deck. Describe your journey, the product journey. The product journey explains how the idea evolved from just an idea, inception stage to MVP stage, and later the growth stage. Customer journey. Customer journey explains the early customers that used your product and how you were able to retain them to become loyal customers. Eighth, your market size versus total addressable market in graphical illustrations. Market size is the total market population you're operating in. An addressable market is the population who is willing and has the capacity to use your product or service. Ninth, your competition. Your competitors, the USP they have and the USP you acquire. A USP or a unique selling proposition is the one thing that makes your business better than the competition. Moving on to a more pitch deck essentials. Monthly traction. Monthly traction is the evidence that your product or service has started the hockey stick adoption rate, which implies a large market, a valid business model, and sustainable growth. Hockey stick growth is sudden and extremely rapid growth after a long period of linear growth. The term is often used to describe what happens when a startup business finds its market niche and market conditions are positive. Data advantage. Data advantage is not a subsidiary good. Data advantage means getting data through the sales you're making, because alongside making sales, you're also gathering some data of your customers. For instance, the age, the gender, the location, and the characteristics basically. Due to this, you have an advantage of the data. Partners. Startups have to mention their partner companies or individuals working in collaboration with them. 13th, valuation. There are multiple methods of valuation of startups. Revenue multiplier or sales multiplier or gross merchandise value. These will be explained in the further presentations. Moving on to our next pitch deck essentials. Survival mechanism. Survival mechanism shows how the organization or the product has survived in a pandemic. The value and the worth this product had in order to survive in the pandemic. 15th, expansion plan. The future projections of product development, the idea and the vision of how to develop and add new USP to the product. 16th, building an ecosystem for exit. If one product fails, how many collaborations do you have to show the exit strategy? Previous investments. How many previous investors do you have in the past? 18th, pathway to next round of raising. How do you plan and what mechanism would you use to raise another funding and investment?